All right, we have morning trade here that we're looking at a name like Workday because Workday reports its earnings after the closing bell today. Now, this software stock has down about 10% or so, a little more than that in 2025. Sam Vadas has all the details, Schwab Network contributor.
Thanks very much for that, Nicole. Yes, we are seeing shares under pressure of Workday ahead of this earnings report, but that is in line very much with the broader market sentiment we are seeing today. Let me run you through the numbers as far as what the street is expecting today as far as adjusted EPS of $2.09. If it hits that, that would mark about a 20% growth rate. So in double digits, revenue is expected to come in at $2.34 billion. That would represent 12% growth, which does show continued double-digit growth if it is going to be able to hit that as far as what it's raking in on those sales. The last earnings call, management had guided for continued strong subscription revenue growth in the mid-teens and steady margins, but it did sell off afterwards. Now, that could have been on concerns about some of the economic uncertainties, the macro environment, how businesses are feeling about tariffs, some of the IT spending budgets. That's certainly what many had been pointing to. But some say that this was a little bit of an overreaction as to why we saw those declines in that sell-off post-earnings report. It does have a good track record of beating earnings, consistently beating in the last 4 quarters. But the stock reaction off the back of those report cards, as I say, has been mixed. So what this earnings has been sort of suggesting to us as far as the overall picture in the season is that it's not always about clearing the bar. It's what you have to say about some of that guidance. So what do we want to hear from Workday? Well, obviously there's a very big focus right now on artificial intelligence. It has very much been incorporating AI into its platforms. It has actually acquired Flowise, which helps create AI agents. That was certainly a headline that had been floating around ahead of this earnings. It's also been expanding internationally. We want to see an update on that. Interestingly, just ahead of the earnings, we've also seen headlines about confirming a data breach where hackers stole personal information. So no doubt some negative headlines weighing on the minds here. But analysts are a little bit mixed on the stock right now. As far as some of the calls I've been seeing more recently this week, RBC Capital maintaining a buy rating with a price target of $340. Right now we're sitting at $226. Wells Fargo lowering the firm's price target to $300 from $325. Still keeping an overweight rating now on the share. They say that the pullback that we've seen, remember Nicole did mention we've seen that double-digit decline as far as year-to-date performance, down about 12%, but they say it presents an attractive long-term risk reward and also believes that AI is more likely to reinforce Workday's advantage than erode it. You've also got UBS analysts lowering the firm's price target in recent days to $250 from $285, keeping a neutral rating there ahead of this earnings report. They do talk about a slight tone downtick from partners compared to 3 months ago, because obviously Workday does have these partnerships, with most falling slightly short of their growth targets and citing growth rate pressures. So as I said, it does look like a little bit of a mixed picture as far as what the analysts are looking at ahead of this report card.
And Bank of America noting that even if there are some pieces of good news, whether it's international, commercial, some of the platform deals that they've been working on, some strong growth that they could see, but it won't necessarily be a huge catalyst for the stock to take off at this time. I guess also there are some headwinds for the group too.
Absolutely. Let's look at the overall sector. I mean, as far as Workday and the broader cloud sector, I mean, we are very much seeing an underperformance across the cloud stocks that have lagged the broader market. And it's really interesting, you know, this sort of dynamic, because you do have the big names as far as the hyperscalers, you know, the Metas and the Microsofts of the world, very much saying that the demand is there with some of the eye-watering numbers that they've been sort of throwing out there as far as CapEx commitments. So maybe the market, as far as some of the commentary I've been seeing as to why we've seen this underperformance in cloud, is sort of suggesting that they want to see proof of all this spend. But it's been really interesting. You know, I've been looking at Workday, having crunched the numbers themselves about the demand, and they say that fewer than 1% of organizations have no plans to use agentic AI. That's according to their own data. So they do believe that agentic AI as far as the demand out there is going to ease workloads. That's about 88% of the respondents in their survey. But, I was just listening to an analyst that Diane was speaking to this morning as well, Nicole, and, they had some interesting thoughts on this report card ahead of these earnings. I mean, they're just saying that they have to have an NVIDIA 2023 style type of announcement. They've got to convince investors why they should buy the stock. Workday needs to come out with something that's ahead of everybody else that really addresses clients' needs. They need to show that they have a competitive moat, and they need to show leadership. So that may be some of the criticism as to why we've perhaps seen this pullback year to date and this overall general sort of underperformance of the sector. But it seems that based on what that analyst was saying, there are some high expectations for this company.
All right, Vadas, it's great to see you. Appreciate it. Now we're going to trade this. Joe Tigay is with us, portfolio manager of the Rational Equity Armor Fund. And as I look at this name, the last earnings report we saw early into summer actually had a big gap down for the stock. Prior to that, the three prior to that actually had some uptrends, but the last one was not good news. I mean, it had a huge gap down, and the question is whether or not there could be some catalysts here for upside. It doesn't certainly seem like the analysts are screaming for that at this moment.
Yeah, maybe some more consolidation is in order. I'm more on leaning on that side, Nicole. So I'm just kind of looking for a little stabilization here. I think there's some signs that maybe companies are looking for outside help with their IT, looking for companies to find them some solutions in AI while we're kind of figuring this whole thing out. And I really do think this company over the long haul has done a really good job in beating their earnings, 7 out of 8, I think it was. So they did have a hiccup recently. I think maybe a little bit more consolidation is in order, looking for a software company. Their forward PE is something around 25.5. If they can have a match and maybe raising their guidance, I think the market will reward this stock. But that said, I'm just looking very short term. Volatility is obviously very high into this earnings report. We're right around 225 on the name. I'm looking at the September 225, 220 put spread, just a $5 put spread. This morning when I was looking at it, it was around 250. So essentially, I'm going to get my 50-50 on my money here. If it's a miss, I probably will lose it. If it's a beat, I certainly will collect all this. So it's kind of a nice risk reward for me. I think there's a better than 50-50 chance that we're higher than 225 after this earnings report.
Okay, what do you think? Thank you for that. I appreciate it. What do you think about the market action we're seeing here?
No question, there's a significant risk-off trade happening into this Jackson Hole. It's not surprising. It's something I've been warning about for a couple of weeks here. September is a volatile time of year. We're in the end of July, start of August. We saw extremely low levels of volatility. We saw the VIX sub 15. So that was a sign to me, hey, there's a little bit of complacency heading into a volatile time of the year. It's time to put on some protection across the market. So that was what I'm not very surprised by this at all, because we had a great run up in the second quarter. Now that we're in this third quarter, kind of wait and see. September, again, always a very volatile time of the year. That doesn't mean that the rally is coming to a screeching halt. We are just going to kind of reevaluate things and take it as it comes. I do think there's some healthy pullbacks out there in some of the really big names out there, some of the high flying names. So there might be some opportunities on this mini pullback.
Right. Joe Tigay, great to see you. Portfolio manager, Rational Equity Armor Fund. Really appreciate it, Joe. Always. Joe Tigay, thank you.